Welcome to the Brew. Today on the Brew interviews, we have Mr. Matt Amberson of ORATS. Matt's a longtime friend, expert in the industry. We're going to go through some trade ideas with his ORAT system. So stay tuned for that opening bell. Yeah. I like the little fade out sort of thing. Yeah.
What kind of brew you got there, Lex?
Well, I'm not drinking on Mondays through Fridays anymore.
Really?
Well, not really, but I'm trying not to.
Good for you. Molly and I have started our intermittent fasting Sunday, Tuesday, and Thursday. So there's no drinking those days. But.
Sunday, Tuesday, Thursday. Those are okay days. I like the Monday, Tuesday, Wednesday version.
Yeah.
Because the weekend starts on Thursday for me generally.
Nice.
Yeah. How you doing, man? Good to see you, as always.
Yeah, doing great.
Good.
Having fun in summer.
Yeah.
And good to see you, my friend.
Yeah, you too. So what is going on with trading of late? Now, the reason I asked that question is it's gonna be a lead up. The reason I ask is because I've always struggled in the summertime with trades. Even when I was a floor trader and you didn't have to really make trades, you just responded to them. It still was a drag. I always thought it was hard. But ORATS and Matt Amberson takes the drag out of trading, right? So
I have some great stuff. It's exciting. I have an exciting safe strangles to talk about. Ooh. And also just how to find trades in certain environments. And if we have time, we could even we're going to have a big earnings season. Yep. That's always the July earnings season is always fun. So there's a lot to do, Lex.
Okay. All right. What do you want to tackle first, Matt?
Let's talk about just generic how to find trading ideas.
Okay.
And some of the tools that I use to do that.
Okay. So first of all, before we go to the screen, let's talk about, I know everyone knows ORATS, but for those who don't, tell us a little bit about, where this came from. You were a floor trader like I was. You built this business and product. Tell us quickly about, that whole deal.
Yeah, I was on the floor. I backed traders like you did. We used that technology. I call you a pure trader. I mean, you had the intuition. I needed the numbers. So I hired PhD and statisticians to get the numbers right. And then I could back people, and we'd work harder than everyone. And we would use data to trade. We figured out new ways to look at historical volatility and forecast volatility. And then it just steamrolled into ORATS. 2001, we started that, and it's a research firm. And then people started saying, well, how do we know your forecasts are good? So we started a back tester. And so then that got a life of its own. And really, that's helped me the most because, again, there's some pure gamblers out there, poker players, and but that's not me. I need to see the numbers. I need to pound through it. And so that's how I learned to take it from on the floor to upstairs.
Okay. Awesome. So you're using your system to do your trades to this day, right? That's your gig.
Oh yeah. I mean, I'm the principal tester, designer, and all that. So we have a great front end now. It feeds, of course, into Tradier easily from the back tester directly in. And yeah, I've been having fun doing well. Our Trader Hub record for the trades is pretty good. I know we're not supposed to talk like that, but it's out there.
Good. I love it. Yeah. You and I have talked about this in the past. As a matter of fact, just recently, I find coming from our line of work in the old days, being a floor trader, a market maker, and moving to the world of, let's call it retail trading or off floor trading, whatever you want to call it, is a massive, massive leap. Because now you have to be somewhat proactive in making your trades. And it's not, you shouldn't make it guesswork. But we as market makers, we just responded to bids and offers. People came in and with orders, we responded. We got a trade, we hedged it, we did our thing with the Greeks, and that was the end of it. I'm making it sound easy. It wasn't. But now I find it difficult. And without something like ORATs to help hold your hand through that trade idea generation, it's hard without it. So I'm glad you're going to show this.
Yeah, and as a matter of fact, I think it's a little bit dangerous. If you've ever been to a wine auction,
Mm-hmm.
I'm always trying to find the best deal out there, and then I come home with spent way more than I should have.
Right.
Well, same happens. Like you need a tool to give you the discipline to only trade strategies that have been tested and you're very comfortable with the returns. Now, I'm very conservative. I always have units. I'm never short units.
Right.
So that's me. And so everyone could kind of find the strategies that meet their investment objectives.
That's right. Yeah. And just for some of the newbies, that all units means is that for every one that Matt sells, he's going to have at least one long against that short. Right. So, right. We're never, and I learned that lesson the hard way. And you probably remember this, but I learned it in Chrysler when Krikorian took Chrysler over, and I was net short units. And that hurt that day. I mean, we ultimately had a good trading day because the volume was so great, but that taught me a valuable lesson. If I'm going to be short premium, it's going to be a butterfly, a condor, something where I'm net, positive or flat units to slightly long units, and use theta in a different way. Right.
Always.
Yeah.
I have that same thing. When you rang the opening bell, it brought me back to the read write when that was taken over. So anything could happen, even in ETFs or indexes. So you got to be very careful. And if you've been around as long as we have, you'll see a lot.
Yeah,
so
for sure,
for
sure. Okay, great. Let's what do you say we get to it a little bit? Let's see what you got going here and with this back tester, and I think you're going to show us how to sell a strangle safely.
Yeah. So, but that's part two. But part one, can you see my screen okay, Lex?
Yep, got it.
All right, excellent. So we have our ORATs has a dashboard product, one of 100 platforms on Tradier. And we have a thing called our positions. Once you start trading, is where you go to a lot. But trade ideas, it is where I come to, again, in summertime when I'm looking for something to do. The good thing about these trade ideas is we have 181 million back tests.
Jeez.
And these trade ideas are the only ones that have been traded in the current environment. And we define the current environment either where the stock price is versus the moving averages, where the percentile is. It's low right now. So we only back test these strategies in these environments, and they have to perform well. So right now I'm sorting on Sharpe ratio. I could sort on probability of profit, reward on risk, margin return, the amount of drawdowns out there, minimize drawdowns if that's what's important to you. But I like Sharpe ratio, which is basically the return divided by the volatility. So these are high Sharpes, which is usually a decent return with not a lot of volatility. So what I'm saying at the top is it's not only a back test, but we show the actual trade in the market right now. So I could see what my reward to risk is. Not too bad. I could lose 2.9, but here's a 9.0 to 1 iron butterfly and SMH. But I like these put calendars. I have these on and take them off and just put the price out there, and all of a sudden it's filled, and I've made a few bucks. So view back test results is always a good thing to do. And I'm also going to show just some of best practices for back testing, because you could always overfit, so you don't want to overfit. So this one, it looks a little choppy because it's only trading in certain environments. And so this has it doesn't look very impressive, a 0.88 overall return, but that's divided by the stock price. If you look at the margin, it's 35%. So that's how much you actually have to put out with the broker. And you'll see things like worst month and drawdown. So all these look really good. So these are the types of trades, this old conservative trader likes to do.
So would you say, Matt, that the trades that sort of pop up on your screen that you like to do, are they near dated kind of trades? Are they midterm, let's say, call it 30-ish days, 60-ish days, or longer dated, well beyond 6 months or so?
I would say mostly shorter term, depending on strategies. I mean, here's one in August, an iron butterfly. I don't like to sell and hold on for that long.
Yep.
September, there are a few. So, I mean, definitely there are some out there.
Okay.
That's not usually what I like to look for, however.
Okay.
So, and let me show you another thing that you could do here. So, how can you tell if it's overfit? Well, we have this thing called find similar back test. So if other back tests that are similar are performing well, then you could feel a little bit more comfortable. Now when we do that, we bring in all the triggers and the spread price divided by the stock price, the delta. So it's not opening up anything right now, so to speak. So if we change the days to expiration for the long, maybe it's 24 days that are long, and we're selling the 11-day. So if we go to 15 days to 30 days, let's just say, and then on the sell, we'll go from 8 days to 15 days. So now we're starting to we'll start to open up, and then the deltas will go from 10 to 20 deltas. So it's a little bit tedious, but this is what you need to do, I think, in order to really start to open up and see some other trades that are similar to the trades that you have. Again, these entry triggers, no exit triggers for this one. And by the way, on a lot of these calendars, there aren't usually profitable exit triggers. I found that. And now, so here's when we're getting a lot more. This is a spread price divided by the stock percentage. So the one that we like, I'm now sorting it by descending. What's the worst that can happen? Well, if you pay a lot of money for this, it doesn't do well.
Right.
That's fine. I could kick that out. So, if I go low, then I like these. So this is just the beginning, but I think you get the picture. The way to do the back test, and you can do the same thing for other symbols. Like we have hundreds of symbols in here. You could go in other symbols and do the same thing. Now I'm comfortable with this particular strategy. Excuse me. So one of the things I could do is scan. So it loads all of the days to expiration, the delta min maxes, the target spread price. I call it spread yield. Loads that all in there automatically for you and goes and scans. And you could set the scanner to, do you want your forecast? How do you want to sort this? And so now that we found this, I can then go do a trade. I can throw it in my paper trading account and be able to watch this. And if I let, this is like forward testing. So and I could add an alert. The alert might be I could restore the last alerts, and I could say on with Lex.
Right.
And that's my trade that's an approach I would take.
Sure. So when you back test these ideas, right, and you find one, how do you exit the trade? Because I'm assuming that when you maybe I'm assuming wrong. You back test to expiration. Do you back test to a certain profitability, or not? So how do you exit? What's the trigger to exit these things once you get them on?
So that varies along with the spread yield. For example, this iron butterfly. Let's take a look at that. So the last one, the calendars, you'll find that it isn't usually profitable to have stop losses or profit targets. But I know on the iron butterflies that the best way to trade these is to have a stop loss, is to have a profit target. So so it varies. And again, this is a long-term trade, but if you're getting out that quickly, the average hold day is only 58 days.
Okay.
It's still pretty long. But so it's all back tested. And again, you could go find similar back tests, go and test all exit triggers. And then you could see, descending. So, the worst ones is a quick stop loss. So, so you don't want to have a quick stop loss on this particular trade. What you want to do is let it run. So, so if I say no stop loss, let's see how that does. Now it's getting a little bit risky probably, but those are the better returns.
Right.
But, the Sharpe ratio might not be so great. So that's the kind. So we test all that stuff. So you and that alert that I put on. So if we did go in and scan for options on this one, and we liked an iron butterfly, we would add those alerts that we saw there, and it'll tell us and it'll email us, when we want to get out.
Okay.
Yeah. So, so you're not flying blind.
Right.
And I don't like to auto trade too much, but it's, so I like to get the message, go in and look.
Yeah.
And see, this is on with Lex.
Right. Okay.
This is exit.
So yeah, so you'll get the alert and then go do an analysis. So as opposed to just setting your levels and forgetting it.
Well, usually I will do it. I see it. I go, okay, it's time to go get out of this trade.
Got it. Okay. Interesting. How has this whole boom in zero DTE affected you guys, if at all? It's so popular. We know a lot of volume. Does this have legs in zero DTE, do you think?
Yeah, definitely. I mean, the strategy that I use, especially in these summer months in between earnings, is a kind of a zero DTE selling strangles, but safely selling strangles. So, is
this a segue? By the way,
it's a segue.
I didn't even plan for this to be the segue, and it's a segue.
You did it. I've been waiting for a segue.
Oh my goodness, you're killing me! All right, I want to learn how to sell strangles safely anyhow. So this is going to be good.
So so here's a back test. Now this is our legacy. So you could do a lot. There's a lot more flexibility and bells and whistles in here. So but here's a Sharpe around one, which you like. The Sortino is even better. But so what is this? So this is a kind of a 1 day 6 delta 9 delta. So you could imagine that these are pretty wide.
Okay.
And we're getting out if it hits a 60 delta. So if either leg hits a 60 delta. So
just so I'm clear, so you're selling a 6 delta strangle?
A 6 delta call, 9 delta put.
I got you. Okay. No, I got it.
Yeah. So 15 delta.
Yep.
And so, if you line that up, so in my option scanner, I have, this is the last one for iron butterflies, but I've saved this. So this is what's coming up now. So you're selling like a 30 cents, 29 cents. And and then I get out at like 3 or 4 cents. So on each leg. And this has been working great. The problem is if you're in this, like you can imagine the risk is quite large. So your risk is, for every $1 you have $23 of risk, and that's way too much for me. So we've talked about safe selling. So what tests well actually is having a long strangle on this is as well. So I have a long strangle. Now this is a long-term strangle, and this is the best performing strangle. So you're only losing 0.26, so you're not losing, a ton of money on this one. And but you still have, like I said, the units. Okay. And then what I also do.
So let me ask a question real quick. Sorry, Matt. Is this essentially like a calendar condor of sorts?
Exactly. Yeah. It's a calendar condor.
Okay.
But I don't stop there, because then what I do is then I pick up like a 4 cent long strangle on the 3rd or 4th day out.
Oh, okay.
Wow. So I have 2 long strangles on for every short strangle that I have on.
Oh, I love it. Okay.
Yeah. And so and I could sleep better at night, and you still get all of the decay.
Mm-hmm.
And actually, those long strangles did pretty well when the market just keeps going up and up and up.
Yeah.
Those long strangles, you just kind of recenter them and you have a profit. So
Yeah.
that's the safe way to sell strangles, Lex.
Well, I like it. So, are you you're using a 0DT to sell each day, and you're pushing that long out there somehow? Every day it expires, you do another one, and then you just keep rolling that short out until sometime you're gonna get near that long one. I guess I don't know if you roll that out as well when it gets near.
Yeah, it's so wide, Lex, that you never get close to it.
Okay.
So here's the whole position. Here's the long strangle with the short. Here's a 4-lot, right? So what I could do is I could say, well, what does that look like? So so now instead of unlimited losses, on the upside, I've only got, what is that, $300, and then down here I have $1.8 thousand. So you got a very long runway, and then you also have the long strangle on top of that. So in case it moves. So that's the way I like to do it. It back tests pretty good. I mean, not as good as just selling a short strangle.
Right.
You'll see other people talking about that, but this is what I found is like I said, the safer way of doing it. And especially in days like this, it's just, we're range bound right now. So it's been great. So
yeah. Do you ever do these? Do you ever look at, I guess it's a long iron butterfly. So you're long the straddle, short the wings.
Oh yeah, definitely.
That seems to be a decent trade depending on price. Of course, everything depends on price. But sometimes these things get really cheap. And I'm like, wait a minute, this thing has to move $10 in 5 hours, especially on a 0DT. I go, seems like it's a no-brainer. I don't know. What am I missing?
No, I mean, they test out sometimes. Now the issue is you have to do it in the right environments.
Okay.
And also, the right type of stock. So we have those scans. I'm just I just can't put my finger on it right now, but
that's okay. I threw you a curveball because we weren't going to talk about that. So that was just like a little slider at you.
Yeah, I like that. I mean, I play off of you give me a hint and I take it, but sometimes you're a tough pitcher.
I'm a tough pitcher sometimes. I think the reason I bring this up is we at Tradier have so much interest in these freaky deaky 0DTEs, and I'm not saying they're bad. I kind of like them because it's either instant pain or instant gratification, however you want to look at it. So we get a lot of questions on this. So anytime I get a chance to ask an expert like you about 0DTEs, I'm gonna do it.
Yeah, and like I said, just always have the opposite long option on if you're selling.
Yeah,
because anything can happen. And another thing that we have, Lexa, that's really been helpful is this macro calendar. You want to know what's going on during the day, and we have like 30 minutes until crude oil. It's a 3-star thing, so we look for bumps here.
Sure.
And so you should know what's going on in macro if you're doing 0DTE, because it really does. It'll drive through a few strikes, and you got to be ready for it.
Yeah, you got to be ready for it. Okay, cool. This is awesome. So folks can go to orats.com. I always say .com assuming, but sometimes it's IO, sometimes it's something else.
No, it's .com. We're old school, man.
Old school.
It's hard to get ORATs and or 5 letters with a .com, but we got it.
Well, that's good. Yeah, you've been around a long time. You deserve it, man.
Yeah, thanks.
You deserve it. So, no, this is great. I've always loved this. And you're integrated with us, right? All good. Yeah. And can we talk about how people get this? I know they go to ORAT, sign up. Ballpark pricing, just generally, is it subscription based on a monthly basis? How does it work?
Yeah, there's a Tradier discount, half off, $49.
Oh, nice.
And there's a free trial if you take the ORATS quiz. We have the ORATS University. So
no way. What's that? Tell us about that real quick.
Yeah, ORATS University on our site. You go to ORATS University, take the quiz right there.
Hold on, let me get you back on. Sorry, I'm doing Luis's job for him. I forgot. Sorry, my bad. Okay, so you have ORATS University. What is this?
Yeah, so orats.com. Go to university and take the quiz.
I'd be afraid I might not pass. Okay, what do I? And then what happens if you pass?
You have to read a little bit. You know, we write things about the volatility service, about back testing, about scanning, risk. Yeah, we're teaching people.
I love it. I love it. So, and then once you pass the quiz, what happens?
Then you get a free 14 days. See if you like it.
Love it. Awesome. Very cool. Orets.com, folks. I love it. Love it. Love it. Good stuff. And I can't tell you how much I'm pounding the drum on idea generation. You retail folks need to have a reason for doing it. It just can't be because it's sunny outside. It's got to be another reason. So this is great stuff for that. Really is.
Yeah, Lex. I mean, like we said at the beginning, you want to have all the research you can. Again, 180 million tests. We've done all the simulations that you could. What is it? 181. We have it right here. 190. Yeah. So, so you know, that's a good way to start. It's not back testing is not everything, but if you have a good way to forward test like we're doing right now. So we have this trade on, and we've been, you could watch how you're doing in paper trading. So that's a good way to do it as well.
I love it. Okay, good, man. All right, good, Matt. Well, thanks for coming on. Appreciate it always. It's always great to see you. We talked last week, I think it was, and then we scheduled this, but I haven't talked to you in a little bit, so it's great catching up. This is awesome. Yeah, we got to meet face to face. We need to golf and sit down and have a laugh. Yeah, I'm always about laughs, and occasionally on a non-drinking day, have a drink. Yeah, I mean, we just light. It's light for us. Well, maybe not light. I don't know. And I love to golf too. It's that season. So that's my gig. Great. Cool, man. All right. Well, good. Awesome stuff as always. Thanks for coming on. And we will, we're going to send this out, and I hope you are just killing it in this market. Although I find these little staid markets kind of tricky. I do. I mean, I don't like these. Got to be honest. Yeah. I like them because me, I'm conservative, so it kind of trickles in, and that's good for me. That's the personality. I like every day trickle, as opposed to the big hits and then strikeout. So I like that the other way better. All right, Matt, great to see you, man. Stay tuned for afterwards, and orets.com. Check it out, everybody. Thank you. Thanks a lot.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.